Hello, everyone. Welcome back to the Daily Gold YouTube channel. Thank you so much for tuning in. This is the Daily Gold podcast, our every month wrap up with Professor Vince Lanci, professor at University of Connecticut. He is also the author of the GoldFix on Substack. Great service. And Professor Vinny, I know you've been very, very busy, so thank you so much for coming on to do this. Uh,
Sure.
I'm conflicted right now because the way metals ended the month of February, just bearish candles on gold and silver. We saw some huge fund flows into gold the last few weeks, and historically, that sometimes can proceed atop, and that kind of worries me after gold has already made this huge run. Everybody's getting bullish about it. The miners a week or two ago, they were sold as they hit long-term resistance. So, a week or so ago, I'm thinking the market's going to correct. Maybe we're going to rest for a few months, but we've seen some strong buying the last few days, especially in silver and the stocks as well. So it leaves me conflicted right now. So what do you say, Professor?
Well, starting with, I agree with what you're saying there. Starting with your comment about the end of the month, was it a bad monthly candle or a bad weekly candle that you saw for the
A bad
metals?
bad monthly candle for gold.
Okay.
We had the what do they call that? The spinning top.
Okay. So, um, yeah, I was looking at the weeklies, I didn't look at the monthlies at all. So I'm glad that you have the monthlies down. I had a really bad weekly candle last week, which is the last day of the month for us. And although it just looks like a red candle, uh, uh, there's an indicator, DeMARK, that I'll pull up in a second, that confirms what you're saying. So just to reiterate what you said from my vantage point, biggest gold inflows in forever, like weekly or monthly, I forget what it was. You have all the news and all the hype, not hype, but all the news surrounding the LBMA uh, difficulty in delivering metal. That's their job, silver and gold. Then you have Luke Groman going on Tucker Carlson, and Tucker asking him questions about Fort Knox, which is just like, even though he's conservative, it's as mainstream media as you can get for 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 gold to be talked about in a major way. And I think the next day gold was down like $50. You know, and I remember putting a post up on social media saying, you know, uh, Tucker Carlson might be Gold's version of Jim Cramer. But anyway, we couldn't tell. Anyway, and I had gotten bearish right after that and got short below 2907. And then it reversed above 2907, and I got long and I made the money back, but I never took the profits. And so I washed out below 2907 again. And that number was my pain number for the week of and after, between February 24th and March 3rd. Let's say that I suffered greatly. And my conclusion after losing money in both directions was stop trading. And and the other, and then I looked at Tom DeMark stuff. And the Tom DeMark stuff told me either bearish or range bound, or put it this way, overbought and needs to work it off. Um, and when I looked closer, I went from being it's a horrible, horrible month, and I'm biased, right? But I went from being it's a horrible month to, geez, it's not horrible when I look at the next week. So what I mean is the month is horrible. There's no way around that, as you noted. And the week was horrible. There was no way around that. But this week should not be as high as it is right now. It just shouldn't. And that kind of negates last week. Can I share that chart to make the case?
Absolutely.
All
Absolutely.
right. So we're looking at the gold weekly, and it's a little stretched out. I can make it a little bit bigger for people. And if you look at the last 3 weeks, we have an incredible trending run. And then if you're bullish, you say, oh, that's a bull flag, right? You say it now, but you didn't say it last week at the end. And the thing I want to draw your attention to is something called a Tom DeMARK sequential. And the Tom DeMARK sequential is basically an overbought, oversold indicator. Very popular, very expensive, hard to get, but I'm fortunate enough to have it. And it counts from 1 to 13. In this case, I have the 1 to 9 version. And when you get to the number 9, when a number 9 pops up on your screen, that's a sign that it's either overbought or oversold. And on my screen, I've colored it so that an 8 is pink and a 9 is red. And when a market's oversold, an 8 is yellow and a 9 is green. And what you could see up here on the top right-hand side is the 8 and 9 are telling you that the market is either going to go lower or sideways. It could go higher, but 90% of the time, these things are really good at telling you to take profits, not to get bearish, but to take profits. So this week ended, and I went, oh boy, here we go again. And I went and I started looking back at the previous ones, and I went, here's my proof. 8 and 9 down for months. Okay? 8 and 9 down. Volatile, but down for months. 8 and 9 down for months. As I said, 8 and 9 down for 3 weeks. 8 and 9 up. Now, it's not a new high, but I guess my point is, if you want to be really specific about it, the 9 is supposed to be the top, signaling either a bearish move from here or a sideways move. And every time I look at these, going back to 2020 or so, the 9 is green. It's like a new high that fails. And then the next week is red. The 9 is green. Well, that's like this. The 8 is green, and then the week candle after the 9 is red. So if you keep going back, what you see is that the candle after the 9 is red. The candle after well, there's one. Is this broke? It failed it, right? So when the market goes sideways or lower, the candle after the 9 is red. When the market goes up, the candle after the 9 is green. Now, obviously, this is going up because it's up. What I'm saying is the candle after the 9 is red, candle after the 9 is red, candle after the 9 is green. Now, this might be a false correlation I'm creating here, but this behavior after this indicator, and in conjunction with the fact that, number one, they found the gold, meaning the gold finally made its way to New York. Number two, the tariffs, every time Trump's tariffs, when you look at news items, every time Trump talks tariffs, stocks drop and oil and gold drops and then reverses back higher. And we're looking at that situation now. I think today stocks are down and gold was lower, but now it's unchanged to higher. Anyway, I'm conflicted as well, and I was looking for some sort of resolution on that. Let me stop sharing that. And my conclusion is, on a simpler basis, is that the ranges are so big up here that it's easy to think either it's a blow off top or it's a pause to go higher. I think the safest thing for me to do is, as a trader, is between 28.50 and 29.30, give or take. I'm neutral. I'm neutral because I lost money, right? I went long, we dropped. I went short, we rallied. I'm like, okay, I'm neutral. I'm trading big ranges like they're trending moments, but they're not. We are in a situation now. If you look at a weekly chart, you see a massive orderly trend for, it looks like 10 or 12 weeks. And now we're at a volatile point. And we've been in volatile points before that have resolved higher. I don't know if this will resolve higher, but I am let's just say violently neutral. Not much really of interest to say, except that I'm violently neutral now.
Yeah, and I think for me, at least what complicates it is the leveraged parts of precious metals, meaning primarily silver and the mining stocks. Those are bullish. They've the last week or so they've outperformed gold.
Right,
So you look at, I mean, silver, because you're right about the weekly candle too. So nasty candle on both the weekly and the monthly. But and today it was mostly flat. I mean, yesterday that was Wednesday, March 5th. That was a really strong move. So you have silver has perked up. The gold silver ratio had broken above 90, which
right,
I haven't looked at that in a few days, but I think it got up to 92. So that was like a 2 year or 2.5 year high. So you have
right.
gold outperforming silver. It looks like a breakout. Oh shit, gold's going to go to GSR is going to go to 100 now. You have that. As I said in my intro, the miners they were rebuffed at long-term resistance again, but they just have come right back in the last couple of days. And so again, silver, very strong candle, and the miners, the advanced decline line. Maybe I could pull that up at some point. Um, the GDX advanced decline line that made a positive divergence yesterday. That made a new high. But GDX has not made a new high yet. It's not that close on a very short-term basis. So you have a positive divergence in the miners in addition to silver perking up. So you have a bit of a dichotomy because silver and the miners are not as extended as gold. So that to me, I mean, I hate to use the word tricky, but that's what makes it tricky because yes, maybe gold can have a blow off move, like you're saying is one of the possibilities. But but again, the miners in silver, uh,
Well, show me what you
they're
mean. I pulled the miners up for you. Show me what you mean about the miners. I mean about yeah, do the miners in silver. Explain that to me. So here's the miners. What should I put up for you?
well, maybe you could back out and look at a 4 or 5 years, like a weekly
Sure.
or even a monthly is fine.
You want a monthly going back several years?
Yeah, yeah,
Sure.
that's great. And so, yeah, you can see obvious February, again, you had an inverted hammer, not quite a spinning top, but um, yeah, you can see that it traded above 42, right?
Right.
Intra month. But then look, that gave back. It's similar to I think what happened is that October, if you go back.
You're looking at
Um,
this one, aren't you? Yeah,
yeah, yeah.
you,
So look,
yeah,
so I mean, this has really struggled to hold the gains when it's gone above 40.
right.
Um, but if you look at now pull up a weekly if you can.
Right, right. Yeah, I'm going to pull up weekly, but I just want to say from a different perspective, every time silver makes a new high, it gets slammed on a candle. So you have a long wick above. And so here we are, long wick above, lower, long wick above, lower, long wick above, lower, right? Long wick above, ridiculously lower, long wick above, higher. So this is a divergence from previous behaviors on the whole. We're keeping silver in its place. You want a weekly
Yeah,
now?
yeah, yeah. We're early in the month though. I should mention that. So there's still a lot
Right,
of time where
right,
market can
right,
fuck us again. Yeah,
right.
see if you can make that like a 5 year, if you can zoom out.
Squish it in a little bit.
Yeah.
Is it? I mean, that's. Do you mind it being that narrow? There it is.
Yeah, yeah, that's fine. You can see where we are. I think 42.50, I think. We need a weekly close above 42.50 to really break out. But you can see if you if maybe zoom in a little bit just so we can
Okay.
see the last because people can see the resistance now. They can see, 42, 43. There is some resistance there. But
You mean like right in here? Right in here.
yeah, yeah. But if we zoom in and just look at the last, year or the last couple weeks.
Oh yeah,
So
sure.
yeah, yeah. So so we had 3 weeks of selling around resistance, and now we have a big rally
Right.
this particular week.
Right. When's the last time you ever saw, say, as an outsider looking at anything silver or miners related, when's the last time you had a bull flag? You just have tops and collapses, tops and collapses, tops and collapses. My goodness, if this turns out to be, I mean, again, like you said, it's early in the month. If this turns out to be a bull flag, that would be pretty impressive for miners. Anyway, I see your point.
Yeah, I'm going to see if I could bring up the uh see if I could bring up my advanced decline line chart. Let's see if I can share my own screen.
Sure.
Um okay, let's see. Share. Okay, so we can see here this is the GDX advanced decline line right here. This is
Right.
GDX.
Uh-huh.
So this is the 200-day for GDX. And we can see this made a higher high right
Right.
here. This has not made a higher high yet. So this is a positive divergence. So this is just telling us that there is some strength in the market because participation is stronger than what you would normally expect. Yes, we started a little correction, but I mean, look at the participation, the cumulative advanced decline. This is not weak. I mean, look at this correction right here. This
Right.
this one that we got here. Look at how the advanced decline line came down significantly during that correction. So this is where we are now. This is a positive divergence.
So
Uh,
you're describing in the index more the ones that are going up, it's broadening. That's what an advanced decline basically is
yes,
for you.
yes. Well, yeah, yes. It's even though the sector has been correcting, the last 3 weeks up until the last few days,
Right.
you weren't seeing all of the stocks correct
Right. Right.
like
Different
you would
indications. So
because
notionally it's
what
weaker, but in
yeah
terms of
when you when
numerically,
when you have like when you have this like you can see this is like all of the stocks are correcting.
right.
But now here's another example. If you go back to May, or here's a mini one. This is April 24. So here's GDX. This is a small positive divergence here where it's a higher low. That's a lower low. And then here's another one in May. I think this is when gold was going sideways. So
Right.
GDX was making lower lows. GDX was trending down like this. But look at the advanced decline line was holding steady. So
Right.
it doesn't mean the miners are going to set the world on fire over the next couple days or week or two. But
Right.
if the sector was going to have a nasty correction, you wouldn't see this kind of breadth or participation, as you like to say. Like this is too strong for the market to suddenly fall apart. Yeah, now maybe this could, it could trend down like that because it can take a couple weeks to resolve.
Right.
But
Right.
this is just a hint. This is a hint that the miners are stronger than you think right now.
All right. So let me throw something on top of that. I saw a report from RBC 2 weeks ago, very short, but it was basically miners suck. The report was basically miners suck. And the reasons were, and they were compelling, meaning not compelling, but they were accurate. Number one, looking at it from a flow base, there is less money going into miners than there was like a month ago, right? So, and the second reason was miners, for whatever reason, are just not doing what investors want them to do. Meaning, you have free cash flow now, return your capital either in dividends or buybacks. And so it went through the whole, and here's the positive scenario. But it was remarkable, and I said it then, but I'm not a big miner person. I said it then, I said, my goodness, if RBC, a precious metals bank, for investors, is throwing in the towel on miners, maybe that's a contrarian indicator. And then I'm looking at things like this. I hadn't looked at advanced decline before. And I'm like, look at that. The miners are going up and money's coming out of them. I went, oh, there's a short covering rally. So it says to me that when you have a market that's It's not necessarily bullish. They can all cover their shorts and then they can go to zero. We know that. But the reality is, when you have this much interest in gold and silver over the last 3 years, and miners didn't do dick, and now you're getting a short covering rally by people that have been shorted forever, finally, and you have a dearth of fresh interest, it kind of aligns to me with is your advanced decline is consistent and makes sense in context of the money that's flowing into miners right now. It's just a short covering rally. Don't be bullish. And I'm saying, yeah, well, it's a short covering rally when no one is buying. So why are they covering their shorts? If no one is buying and this sector sucks, why are they covering their shorts? It's like they're not meme stocks. What's going on? So maybe something is going on. Maybe we don't know about it yet.
Yeah,
Anyway,
I want to just add on to your point, and this is anecdotal or subjective. I remember after 2003. Now the big miners they started rallying at the end of 2000. So it
right,
had been going on. This was before the gold ETF. So of course, like you pointed out, the miners used to lead gold, and I mean they still do it at turning points. But in the big picture, they bottomed in late 2000 before gold in 2001. But so I want to talk about 2003 and 2009. So the bottom was already in the precious metals sector. So a little bit after the bottom. These were points where gold was correcting and consolidating, but silver, the miners and the juniors really outperformed. So I remember this more so in 2009, where gold had that quick rally from 700 to 1,000, and then it peaked right when the stock market hit its low, February, March 2009. So then gold kind of bullish consolidated for 4 to 6 months. But because it took another 6 months for gold to break above 1,000. But so gold was correcting and bullish consolidating, but miners and juniors, I mean, they weren't shooting higher, but they were still being bid. They were holding up better. Some of them were making higher highs, even as gold was consolidating. In 2003, I mean, I remember it less so, but 2003, silver and the stocks were really outperforming gold. The juniors had a huge move in 2003. And so I'm wondering, could we see a repeat of that? Because as you already said, as we both have said, gold is really stretched. A lot of money has come into gold recently.
right.
You know, it's you look at the performance of the last 12 months, and miners are cheap. Technically they've been trending up. They're starting to hold up better, but everybody still hates them. Silver has keeps knocking on the door of 32, 33. Could we see an environment of this year where gold consolidates or corrects around 2,800, 31, 3,000, whatever, but these flows start just trickling in to silver and the stocks, and they just kind of creep higher?
Um, yes, like I'm trying to think about this. Um, miners, see, I'm out of my league on the miners. I mean, what I know about miners is when for me, which is contrary to what you're saying, when the juniors lead, it's not good. When the seniors lead, it's good. Now, that's because I'm not a big miner person. And I'm just looking at what happened in 2020, 2022 area when the juniors led. And that's because everyone was being given free stimulus money. But speaking about silver as a proxy for the miners, if I've made a shit ton of money in gold being long for the last year and I want to take some profits, I'm going to put some money into silver. I'm going to put some money into gold miners. And that's been happening. That has been happening. Macro discretionary has been unwinding gold and covering silver shorts. So it argues that they're covering shorts in miners as well. It also argues, I've heard from someone, that banks have been short miners forever, probably part of their repression play. I'm just goofing, but they're covering shorts. So maybe we're going to start seeing recommendations on miners soon. So putting this all together, the next leg higher could start with silver and miners. Uh, and I don't mean it's going to start with them. I mean, gold makes a new all-time high again. And this time, silver doesn't stop at 33. It doesn't stop at 35. You know, the first leg of every gold higher is central banks buy, bullion banks cover, market goes higher, silver finally catches a bid, and that's the high. You know, it's like silver's like the high beta after effect. Well, maybe the next time it's like a baton. Gold leads, silver catches a bid, goes higher, it gets above some important technical level, like you're also showing in GDX, and then they just take turns racing higher. I don't know. But I certainly understand what you're saying. Um,
Because just to cut in for 5 seconds, because I think if we were going to see more selling, more of a correction in precious metals in the last 3, 4 days, silver and the miners would have been way weaker. They would have been much weaker.
right, right. Yeah, I mean, after that, look, the month ended. I mean, the month ended strong, so that's not going to attract macro discretionary buying. I mean, it's not going to attract macro discretionary selling, but they were all long and they sold. You know, the smaller investors are making money too now in gold. The CTAs, the smaller funds, they're making money too. So that's one less seller in the market. On top of that, banks are no longer selling. They're covering shorts every dip they can, and that's why we're seeing more V-shaped bottoms. But I think to your point, I think the whole market is broadening. Now, I think that's the word, broadening, right? The advanced decline shows a broadening rally. The silver, silver's not outperforming gold. You know, the gold silver ratio is, whatever it is, 90, 89 now, right? So it was between 90 and 92 for a decent period of time. Well, okay. So if they're not going to let the gold silver ratio drop to 70, maybe silver needs to get above 33, and then it'll move all on its own with silver and gold rallying. Anyway, I don't know. I don't feel strongly about it. Uh, uh, but look at today. I mean, the stock market is down 100 points. Gold's down $5, right? The GDX is, where's the GDX today? It's down 1%, which is not much, Silver is stronger than gold today. By the way, I just want to, this is the stuff that I look at. For the last week, gold has rallied, silver's had a couple torrid days. But for the last week, every time tariff news has come out, silver has held its own. Copper's rallied even more, but silver has held its own. And by the way, that's not supposed to happen because they're economic metals. The tariffs are taking their toll. There's no reason to be bearish these markets anymore. So anyway, maybe when stocks bottom, GDX does what gold used to do, meaning everything comes off, stocks bottom, GDX rallies more. I think I'm bullish silver again. Let's put it that way. If the stock market stays down and they don't crap on silver, then I'm bullish on it.
I think what you said, you're broadening. That's a good word. And I think both of us, we don't necessarily feel like really strong that this broadening is definitely going to happen. But it just, from what we've seen, it seems like a possibility. And yet, and maybe, and when you're saying when stocks bottom, you're talking about the stock market. And so that's interesting because that could signal the normies or
Yeah.
generalists. It'd be interesting if when the stock market makes a low, and if miners actually do well and outperform gold and silver, then maybe a little bit of normie money and generalist money is starting to sniff silver and the miners versus before that's just like, I'm just going to buy my GLD. It's going up.
No, well, more. You're right. I mean, more for the miners than silver. Here's a scenario that's very possible and has happened many times in the past, usually in the 70s and 80s or early 80s. And that is during a stagflationary environment, everything sells off. right? And then let's just go. Let's not do an example. Let's just go to what's going to happen now. This is what I think could happen and will happen. We have a stock sell-off, a day, a week, a month. I don't know if it's a crash, but taken as a whole, everything that everyone is long gets sold. So the Magnificent Seven, tech stocks. And then they go to cash. And then as soon as everyone starts to feel that the Fed's going to ease or some form of stimulus is going to come, they start to buy stocks again. What stocks will they buy? Well, they won't buy as many tech stocks as they did in the past. They will buy miners this time because they're all thinking about inflation. Tips suck. Gold has already rallied. They may not, the normies, right? The generalists probably won't buy silver. They'll probably buy miners. People like me will buy silver. So I think it's completely a good scenario. And I'll quote again, I'll quote Michael Hartnett, who said this about a month ago, and he's been saying it in different ways ever since. He said, how did he put it? He said he's not necessarily bearish on stocks, but he's bullish on bonds and he's bullish on gold. And one of the things he said was the leader of the stock market rally is tech, specifically the Magnificent Seven, right? Maybe it's the final four now. I don't know who's left, but whoever's doing well, right? So the leadership that leads the rally, that starts it and then overperforms, has been tech stocks, AI-generated tech stocks. He said number two in this market has been gold. Number two. Gold's been up more than stocks in general, but tech rallies 20%, gold rallies 15%. So if you were to look at, say, gold versus NVIDIA, I think that's an example. If you were to look at those sort of things, or gold versus AIQ. AIQ is an index that covers AI stocks. His point was that the technology sector has led this market higher. And number two, after being number 5 or number 10, is now gold. He said, when gold starts to lead this market higher, meaning stocks are called up 50 and gold's called up 50, you know, that type of stuff, or stocks are called down 20 and gold's called unchanged, that will be a sign for him to start telling his clients to rotate. He didn't say miners. He said rotate out of stocks and into gold. So maybe he means miners. I think the point is, as the leadership changes in the stock market, then you will get more buyers of miners on every dip in stocks. That's it.
And I think the charts are starting to bear that out a little bit. I mean, I guess I could just real quickly, I could share, let's see here. So this is gold against, this is just GLD against the Mag 7. So there's an ETF for the Magnificent Seven. Are you aware of that?
No, I'm sure there was, but I didn't find it. I went with
Yeah.
AI.
So the symbol is MAGs. So this is, we can see like this is how much it shot up. Now it's above the long-term moving averages.
Right.
So this is gold against the Mag 7. So here you could go back. This is when we broke above 2100. That was the first move. But as we mentioned, it was still going down. And by the way, gold against uh, tech overall, or gold against the NASDAQ, this here has been a little, let's see here.
Now, you look for that. I have on my screen something that I've
This,
been trading. I've been long the GDX and short AIQ, and I have that chart ready to go. So show me what you got.
okay, so this is gold against the NASDAQ. So this couple days ago, this actually hit, I think this was
You have to,
like
you have to share it. You have to share it.
okay. Okay, let me. Can you see this right here?
I cannot. I still see your lovely face.
Oh,
Oh,
let me
looks like
try that again. Let me try that again real quick. Okay.
there you go. Now it's working.
All right. So this is gold against the NASDAQ here.
Right.
So this actually was I think a 22, not quite a 2-year high, but a 22-month high right here. by
right?
a hair. Let me see. I want to just show another chart, which is
When you're ready,
better.
I have GDX versus mags set up.
Okay, yeah,
And
let me do this real quickly.
yeah,
Okay, cool. All right. You can see this.
yeah, I can.
Okay, so here we have gold against the S&P. This is gold against the S&P. Here's gold against the Nasdaq, gold against the equal weight S&P. So this is as of yesterday. So look at
Right,
gold against the equal weight. This has been trending up, but if you put a line here, boom, breakout, back test, higher high. So that's
right,
equal weight. That's all the 500 stocks equal weighted. Here's gold against the Nasdaq, which we just mentioned. This broke out by a hair. That's a 22-month high. And look at gold against the S&P. This is right up against, I think 2 days ago, the close was the second highest close in 4 years. So that's what Hartnett is talking about. Um, maybe you may be starting to
leadership
see that.
rotation.
Yeah, we can see the leadership's changing because gold is trying to really assert itself now against the stock market. But anyway, something you wanted to show. So the
Oh yeah.
floor is yours.
No, no, I have this chart because from our last conversation, I created it. So, and I actually put the trade on. All right. See that? That's the GDX versus the Magnificent Seven on a monthly basis. So let me put it on a daily basis. Here, easier to see. That's what you're talking about, but it's GDX, right? There's your resistance there. Here's the trade that I actually put on a lark. Uh, I shorted AIQ, but it looks kind of like this. This is the GDX versus QQQ. Look at this. Look at these 2 weeks here. Maybe the GDX isn't going up, but I'll tell you what, it's outperform. Look, when stocks crater 2,000 points, and I call my broker, but I go, how is the Magnificent Seven doing? They're down 25. Okay, I just lost 30% on my 401k. How is my gold stocks doing? You've got 1% of your net worth in it. They're up 10%. Oh, okay. Well, let's put all my money in gold stocks. That's what's going to happen next. Yeah, that's right.
It's a beautiful double bottom here.
That's a beautiful double bottom. That's right. That's the W. I love the W's. Double bottom W. That's a beautiful double bottom. That's good looking, right? Yeah.
Yeah.
You get me
No.
excited now. You get me all excited.
No, yeah,
Uh,
yeah, that's very interesting. Maybe we have the title for this interview about how capital is moving out of tech stocks into gold and gold stocks, perhaps based
I
on
mean,
these rate that's why I love these ratio charts. Like you can just glean so much info
right.
when you look at these ratio charts.
Well, this is simple subtraction. So I could do ratio, but this is simple
Oh,
subtraction. This is GDX minus
okay.
QQQ, and it's raw. But here, I'll do GDX for a ratio. GDX divided by QQQ, I guess. See what that looks like. Yeah, now we're butting up against your resistance, right? That's your point. This is your thing here, represented differently.
That's even stronger. I mean, it's even stronger than a double bottom because you have the higher low on the or is that still weekly? Okay, yeah, I see.
It's on a weekly. Yeah, I'll go daily so you can get an idea what that looks like. Yeah, I hate trading US time. But yeah, there's the daily. There's another. So let's dream here. There's the weekly ratio, 1-to-1. That's nice. Plus, it's got one of those 8s and 9s. Look at this market. I think it looks great. I think it gets above here.
Yeah, that's the target.
It goes there. And that's the thing. It doesn't have to go. I know everyone wants gold stocks to go up, but I trade arbitrage. So I'm like, I trade spreads. I'm like, you know what? I'm just going to short more AIQ or maybe Mag 7 this time and buy GDX with it. Anyway, so here's the stock that I shorted, just to give you an idea. Uh, that's my short. And I've made money because that stock has gone down. GDX hasn't gone up yet. When it goes up, it's going to be crazy, that spread, which is your W bottom, your double bottom.
Yeah, when the gold stocks break out of those bases, that's when it'll go really crazy on the
Right.
what do you call it? The numerator.
Right, right, right. From the
But
numerator
I
going.
yeah, but I like that. But yeah, I like this the subtraction. Yeah, that looks really nice.
Yeah, the reason I do the subtraction is because I will go 1-to-1 on my trades. So I just go, yeah. And when you put a trade on like this, you're doing a spread trade. You either do it notionally flat or share flat. So I will go share flat on these uh, because I want to be short premium in general. If I can get away with it. Uh, Basically, I want to be short stocks. So for every one $500 share I'll to sell, I'll buy one $50 share. So I'm really just short the stock market with a gold kicker. So yeah.
Okay, I know I want to keep this a little short, Professor. Anything else that you would like to mention or that we need to mention before we wrap it up?
No, but I do want to put gold silver up for a second. Uh, there is let me hide this. Hold on. I for years, I'll put this up there, give you an idea how long I've been watching this chart, how long I've been watching this spread. I have been charting this since 2016. And what I did during this time frame is I bought silver and sold gold. And I watched it march slowly up my ass for 2 years. I got out before this craziness, right? But when it came back down here, I traded it again. The last time I traded it and made money was here in 22. Anyway, silver was trading 1767 and gold was trading 1708. From there, I tried to assume we'd had another structure like this, and we didn't. Hold on.
I think your dog agrees.
I'm going to have to cut this short, but here's what I want to show you. I had been biased looking at this structure, at this upwardly sloping thing, right? Well, in 24, the upwardly sloping thing broke, and then a new one started, up, down, right? So now I'm looking at it like this. The trade is to be, if you want to trade it technically, purely technically, the trade is to be long silver and short gold and stop yourself out on a weekly basis if we settle above 92.5 or if we trade above 95. That's the trade for me right now. That's my next trade that I'm looking to do. I can't bring myself to short gold, duh. So I'm going to buy silver. So that's what I'm looking at. I'm looking at if the gold silver ratio, if leadership is changing from stocks, from tech stocks to miners, and leadership is changing from gold to silver, as it could very well be, then I want to be long silver. How can I be long silver without being crazy long silver? Well, I can be long silver and short gold because I actually think in a tariff situation, copper's going to do well and it'll drag silver higher. I could just be short gold by being short call spreads and long calls on silver. Anyway, this structure here, this new structure here, I look at this as 1, 2, 3 triple top. And people argue about triple tops, and I'm just going to say triple tops are they hold until they don't, meaning unless this gets above 96, it should go to 84 pretty soon. So that's it. So I'm shorting gold and buying silver with an 84 target for the gold silver ratio. And if it gets above 96, I'll be out. That's it. That's the trade I'm walking away with from this.
Before I let you go, can you just pull up silver? Because I want to talk about silver nominally,
Yeah,
if
sure.
that's because we were talking about it last time. I think you said if this gets above 33, 34, they're not gonna be able to stop it. But
That's what I said. Yeah, I remember that. That was it, you want a daily chart or a weekly?
whatever you prefer, like just give me your
Oh, yeah, yeah.
analysis of.
Yeah.
of silver. So yeah,
All right.
this thing has been a mind fuck if you've been trading it, because it looked, I mean, two or three times it looked like it broken out. Then it came back. Yeah, that nasty candle we took. Now it rebounded. Now it's so you're looking at not futures. This is continuous.
Yeah.
Or
You,
not. This is spot. That's the word I was looking for.
yeah. I'll put up futures. That's all right to match your um, levels. Yeah, I can do that. All right. So there's continuous silver daily and futures, I should say. And I think what did I say? Oh, see this here? See this selling here? I may have said something different before, but it's very similar. I don't think that they're selling here this time. I think if we get to 33.30, give or take, I don't think the market stops it. So I think, for example, if you want to look at this as a building, here's your structure, and here's your gazebo, whatever you want to call it, or whatever that's called, spire. I think if it gets above here, this wick doesn't matter. If it gets above here, this time it runs up to here. So $35. So I think 33 and a quarter gets you $35. That's what I think. And we're pretty close to that. So I want a weekly if I want to be safe to renege on my own numbers.
Was it 33.49? Yeah, 33.50.
It is, yeah. So there's a difference between accuracy and precision, and I'm not precise in these conversations, but I'm precise when I trade. I go, okay, I'm going to buy it, and I buy it, or sell it. So let's just say a close above 33.54 on a daily basis that does not retrace below. That's too low. 32.89 should give us 35.12 pretty quickly. That's it. And you can delete this show if I'm wrong. All right.
Yeah.
There's your so there's a structure. I mean, you
Yeah, as a technical nerd, I'm excited for our next show because we end of March, we have end of the quarter.
oh, that's right. And those are
So
good.
yeah.
Those are
So
good.
we
Those are
don't
good.
we get a new monthly and a new quarterly chart.
Right, right. Now look at this chart. See, this is silver finding its value. This is silver being repressed, not illegally, being repressed because people are selling it to buy gold. During 22, silver took a beating while people were buying gold because the Fed was raising rates. And then it came back up to find its level. And last time it traded in between here and here for a while, right? And then when it got back into this level, it didn't stop. It just went right through it. So silver found value, was kept down by rates, found value. I'm saying to you that 29 to 33 is value. It's no longer the highs. We've been working in this area forever now. It's like
And
this.
that what you said there, like the two things. First, 28 and 29, that's the really, really strong support
Right.
on my charts for silver, 28, 29. The second thing, what you said, and I made a comment, I'm looking at analyzing silver stocks at 28 or 29.
Right.
Well, because that's how I changed, and that's how I've been doing it in the last year or two, is kind of assess them at current prices. But if you're looking at silver stocks that have a lot of value at $28 silver, and your silver's at 33, 35, um, depending on where it's trading, that can be
Right.
really undervalued. But yeah, I'm going off on a tangent. But yeah, so 28, 29, yeah, that's value. That's really, really strong support for silver. So yeah, we'll see if it can get to 35 or 37, if it can
And I'll
break
just throw this
resistance.
at you. UBS, which does a lot of precious metals, and they actually have clients who buy that they care about. They're not, just Muppets. They said, we like gold, we're long gold. And they've been long gold for $500 publicly, and they have never said buy silver. They keep saying, We're looking at silver. We're looking at silver. We will buy a dip between 28 and 29. And they will buy it by selling naked puts, which is crazy for us, but that's what they'll do. So there you have it. I think the more aggressive people are starting to buy silver now. That's pretty much it.
All right. On that note, I hope we kept this short enough for you and everybody out there. So, Professor, thank you so much for coming on, doing this as always.
Huh?
And before I let you go, please tell everybody out there how they can subscribe to GoldFix.
Sure. GoldFix is GoldFix on Substack, GoldFix. You'll see the initials VBL, Victor Boy Larry, associated with that. Those are my initials. It is a precious metals, geopolitical, and monetary newsletter and there's equities in there as well, for people that are looking at precious metals. We have in-depth analysis. We have reports from banks. We have stuff you're not going to see anywhere. What we don't have is a lot of technicals, and that's why it's always fun for me to be here. So please subscribe, and if you have the wherewithal, take a premium subscription. If not, we're welcome to have you anyway. Thanks a lot.
All right. Thank you so much, Professor. Everybody out there, thank you so much for tuning in, and I hope you guys have a great weekend, and we'll talk again next month, Professor.
All right. See you soon.
Thank you for tuning into the Daily Gold Podcast. For more interviews, editorials, and analysis, log on to TheDailyGold.com. And for premium coverage of precious metals and the best junior mining companies, visit TheDailyGold.com/premium.